All right, everybody, Stocks by the Numbers, welcome back. Today is Wednesday the 17th. Wanted to do an update here on ToughBuilt Industries, ticker symbol TBLT, listed here on the NASDAQ. Stock right now, 682, down over a point and a quarter, over 15.5% here on the day. And the stock got absolutely decimated, going all the way back here to about the tail end of June, the last time we looked at it. Now, the company made a new offering. You can see the massive volume, in my opinion, basically leaving the stock. And obviously the company chunked down here from a higher level and continued to drop down. And since then, the company has reported earnings a couple of times. We can see here that we have some positives and some negatives. But overall, in my opinion, it seemed like a negative situation because, as I always said, in my opinion, when it comes to these newer, smaller companies, these companies who are expecting a couple of million, 10, 15, 20 million a quarter here, they need to beat those numbers, in my opinion. That is the only way to show Wall Street that you are a growing business that is potentially undervalued, or as we've seen with some other stocks, could be also thrown into the ring of a buyout candidate. And what we have here is a company that almost reminds me of, what was that one we looked at? Origin Materials. Similar situation, right? And like everyone's pumped about it, everyone thinks it's going to do good, and then we look at the numbers, and the numbers just consistently come in light. And what we see here is going back to the tail end of August, we can see that the bleeding has been kind of contained, right? The company coming in with much more narrow losses than Wall Street was expecting, as you see here, coming in almost 37% above Wall Street's expectations on that loss on the EPS side. But now we can see we have a miss by about 10 million on the revenue side. Estimates of 28.9 million. The company comes in with 18.9 million, over 34.5% miss. Let me tell you something. That's a bigger miss than we want to admit to ourselves, right? And then obviously the company continues to sell off after that news. And now we come here to the next quarter as we see middle of November. And again, same exact story. The company actually narrows the losses even more and contains them even better than they did the previous quarter back here. And we can see that the company comes in almost 41.3% above analyst expectations on those losses on the EPS side. The problem is missing again by 30 plus more percent on the revenue side. Estimates a tad below 30 million at 29.9. The company posts only 20.6 million. And this is what I'm talking about. Now it has to be either one of two things, in my opinion. Either A, they do not know how to properly advertise and market their product to get it out to the masses, to bring them into the stores and to the website to actually buy the products. Or B, perhaps the products just are not that good. And I know that a lot of people told me that they were hyped about the stock, they were pumped about it, and they see bigger and better things coming down the road in the future for the company. However, the problem is this is basically what I mentioned with what was the last video? Evofem and Aditex, right? This is the same thing. Evofem was an OTC stock traded on the over-the-counter. This company trades on the NASDAQ. But this is basically what I said in that previous video, if you want to go back and watch it, when we spoke about those companies doing their reverse stock splits. Now we're dealing with a company that is NASDAQ listed, right? So now they're basically between a rock and a hard place. They have their back up against the wall, and now they have to enact a reverse stock split just to maintain listing here on the NASDAQ. The shares got consolidated down, I believe, to about 500,000 shares and change now. So obviously, that reverse stock split really threw everything out of whack, but this is the problem. Again, in my opinion, it is the revenue stream, because we're kind of seeing, if you think about it, we're kind of seeing the opposite situation with a company like SoundHound. If we look at SoundHound, we can see that the EPS is kind of hit and miss, but what are they doing? They're consistently signing new clients, increasing their revenue, right? Expecting bigger and more forecast and revenue to come in this year, next year, the following year. And of course, if we look at earnings, the company is just, even though it's slightly, the company is coming in at or above Wall Street expectations. And I'm telling you right now, if this company posted like 27, 28 million, believe it or not, in my opinion, I don't think it would have gotten beaten up this much. But now you're essentially telling me we have a company that really doesn't seem like it's growing and is consistently missing on revenue. Now they enact a reverse stock split, as we see here, 1 for 65. So again, what that means is, just like we spoke about in the last video, For every 65 shares that you are currently holding, you are now getting 1 share. So if you had 50,000 shares of this company, we pull up our trusty calculator, you are now getting 1 share for every 65 that you're holding. So we divide it, and you can see that your 50,000 share position in TBLT has just become roughly 770 shares. What an absolute embarrassment to not only the stock market, but to shareholders as well. I have no idea what this company is doing. And if we look out, unfortunately, analysts are upping the estimates here for this quarter coming out approximate April 1st. And we can see the company still expected to lose 29 and a quarter per share. However, revenue estimates now up above 30 million, sitting at 30.8 million. So now, in my opinion, especially after the reverse stock split, as we spoke about in the previous video, once the reverse stock split is enacted, you can see we had a consolidating channel going upward, and then we just broke big downward today, down almost 14%. So in my opinion, unfortunately, it's probably going to continue to slide, and believe it or not, you may see this, I'm looking at the 1-year chart, by the way, you may see this bottom fib here at the 1 level. On the 1 year, you may see a 434 and potentially even lower, believe it or not. And I know that really sucks to hear, which is why I can appreciate the fact if on the news of the reverse stock split, again, I know I'm coming to you a little bit late with it, but obviously if you're a holder, I'm sure you're aware of the news. But at the end of the day, this is why we always say, usually, in my opinion, when a reverse stock split is being announced, you can probably more than likely just take the loss, liquidate the position, hang out for probably at least a couple of months, and give it another 1 to 2 earnings reports to potentially find that bottom and obviously rally and make that U-turn. Similar to what we saw with a Fubo. Again, I brought up Fubo as an example in the last video as well, because they enacted reverse stock splits as well. But they found the bottom, they beat them up, they brought them down to sub $1. Then the company was undervalued in the numbers. But more importantly, what did they do? They started to beat earnings, and not only on the EPS side, but most importantly, in my opinion, they began to beat on the revenue side, and that's what this company needs to do. So they may beat the crap out of it and bring it down to $4, $3 and change, but if this company somehow is able to come in even near this Wall Street estimate here on this revenue number, north of 30 million, I think we could potentially find the bottom, and we could call it the U-turn recovery time period taking place here within these next couple of months after this this earnings report comes out, hopefully, if they beat it. But you know, unfortunately, only time will tell. But really no news here, as you see. Apparently it says here, yeah, see, there were almost 37 million shares. Now there's only 567,000. But it also spoke apparently, yeah, there was an amendment, as you see here. Certificate Corporation as amended at a ratio of not less than 1 for 20, right? So it was going to be at least 1 for 20, but not more than 1 for 100. And I actually have a feeling that they kind of just went mid-range and picked 65 just so that Wall Street wouldn't absolutely decimate the company. Because in my opinion, again, as I mentioned, usually after reverse stock splits, 99 out of 100 times what I've noticed is the stock continues lower, really, no matter what's going on after a company reverse splits. But again, if they took the high end of the range and did the max that they could, 1 for 100, chances are, in my opinion, Wall Street would have completely taken them to the shed. So as you see, the company did a 1 for 65. They kind of tried to go in that mid-range. And again, this is why I mentioned that struggling companies with, you know, the revenue trickling in, consistently missing estimates, definitely not a recipe for success, definitely a recipe for disaster. And like I said, because they were listed on the NASDAQ and they wanted to maintain that NASDAQ listing, the reverse stock split had to happen. And they did what they had to do. And now, unfortunately, we're just kind of in wait-and-see mode, right? We can switch over here to stock charts. However, again, it's really not going to matter, because we're talking about a financial catalyst that basically, in my opinion, just X's out and completely dismantles any technicals that we can potentially find. So even a situation like this, we can say, you know, we had tightening in the Bollinger Bands, we rejected off the 50-day moving average, and then we started to drop down. And anytime there's big pops or big drops, I told you the Bollinger Bands widen, and see, they kind of form like this opening, this trumpet pattern. And then once it kind of finds its bottom and begins to consolidate again, that's when the top will curl and the the top band will curl down, and then the bottom band will begin to curl up, and it'll start to tighten again. However, as I mentioned, with the reverse stock split, none of this really matters. But I just wanted to take a quick look at stock charts for you guys here. As we see on the daily, we're at the bottom Bollinger Band. Looks like the MACD was almost about to cross there on that little higher up consolidating channel. And then, of course, we broke down, had a big down day today. So chances are the MACD, in my opinion, will probably continue to slip. The stock being there at the Bollinger Band is really insignificant. RSI down here at 31.25 on the daily, but that means nothing. As we see, even before the stock split, the company looks like for about 2 to 3 weeks was sub 30 on the RSI, and of course never got to 70 going all the way back to August. So that's why this company in overall it just seems weak. And if we look at the weekly here again, we can see the RSI down here at about 25.5. It really doesn't matter. The RSI has been sub 30 going all the way back to May, even before they announced that new offering. That was the big drop. If you remember, I did an update video back in June. They spoke about a new offering, and of course that's usually not good news, especially if the company is struggling. So then they continued to slip down, they continued to miss earnings, and then boom, we have a reverse stock split. So now it kind of threw all of these numbers out of whack. I got a 200-day moving average up here at $3,959. I'm not seeing that it rallies that high, but even more importantly, though, you can just look at the overall trend, right? And again, I understand if you own this, you're very upset and you don't want to hear any of these negatives. But again, this is why we have to look at both fundamentals and technicals. And it's very simple to just learn some technicals and then, you look at the Dow, or you look at, TBLT for the day, and if you see like a pop and then a consolidation, you can say, oh, it's, potentially forming a bull flag and it could take the next leg higher. Yes, of course, as we see, it is possible to make money strictly off the technicals with trading. I mean, everyone and their brother started up a YouTube channel and charges, $10, $20, $50 a month just for them to tell you, oh, head and shoulders, it's going down. Oh, bear flag, it's going down. Bull flag is going up. And, at the end of the day, as we see, it doesn't always come back down to that. Sometimes the technicals are strong and I'll look at the fundamentals and they'll be weak. And I'll just say to myself, it doesn't matter what it shows in the chart because the stock should be lower. And usually I'd say about 8 out of 10 times it has been coming to fruition, of course, minus our random overpumped high flyers like Spotify, Shopify, but Airbnb, another one, right? But again, going back to my original message that I started to tell you guys when I made the channel, I specifically told you what you could expect with a Democrat behind the steering wheel. And again, people always tell me, try not to bring politics into it and keep politics out of it. But at the end of the day, they are connected. So you cannot completely ignore what's going on in the political space or in that geopolitical realm even. But more importantly, again, I mentioned that Joe Biden, in my opinion, will most likely basically do pretty much to the T what Obama did. And I told you guys that, yes, we had the big market crash, and then Obama was in, and markets rebounded, but then kind of stagnated for several years until kind of 2016 when Trump came in and obviously got them to pop to new highs. But what you're seeing, again, is the fact that a lot of sectors are stagnant, a lot of sectors are struggling, a lot of brand name, undervalued, in my opinion, American stocks aren't moving the way they should. And what is the one Lone Star sector that is performing well? Technology. And I mentioned that over a year ago on this channel. I mentioned it in multiple videos, and that's what you're seeing here. You're seeing the overvalued tech stocks are continuing to climb because people see that that is the safest place to park their capital here in this market. The margins are extremely high. The revenue keeps flowing to the tech stocks. So that's where people are putting the capital. That's where the volume is. That's why they continue to climb in value. And we look at a company like Campbell Soup, CPB, and it kind of stagnated for a while and it doesn't make sense. However, again, if you look at the overall broad picture, it does, of course, begin to start adding up. But again, Just a little side note, I still think CPB is undervalued, but that's just my opinion. But here, ToughBuilt, again, as we see, sitting here at the bottom, Bollinger Band means absolutely nothing. The MACD climbed up here over the years, completely flattened out, but still sitting here at negative. And more importantly, again, the overall view, I know I went off on a tangent like I always do, but the overall view, again, which I mentioned last time, was the stock has not been above the mid Bollinger Band going all the way back to the beginning of 2022. You can see multiple rejections, fighting with that tightness, and then dropping and rejecting downward. And again, as of late there, early December, getting up to the mid Bollinger Band and then rejecting and dropping down. So when you have a weak stock with weak fundamentals, in my opinion, that is not worth your time, energy, or attention. And again, I understand everyone wants to buy a 38-cent stock, hold it for a couple of years, now all of a sudden it's worth $8 a share. You look like a financial genius. Totally understandable. However, again, if you're looking for those situations, what do I always say? In my opinion, you have to follow the money. And I would rather buy a stock like Fubo that has already proven itself over the last several quarters and consistently keeps growing, signing new deals. They just had the new agreement with Nexstar Media, which is one I wanted to talk about also. But you know, they're doing things. They're building the business. They're generating more revenue. So that's why I'm saying, in my opinion, yes, it did look speculative after the reverse stock split and they beat it up, but you have to follow the money. And that's why, again, a situation like ToughBuilt, as you see, the money just really isn't there, man. And, you know, again, going from 30, 29.6, and then, you know, you post less than 19 on almost 29, and then you barely break above 20 when you're supposed to be at 30, and that's what I mean. And now next quarter you're supposed to be above 30, and I'm telling you right now, man, if this company comes in with a very light number again and posts something crazy like 22 million or something, I'm telling you, Wall Street is going to decimate it. But I will say, in their defense, again, I have to assume it's potentially a marketing and advertising issue. I really do. Maybe they need better salesmen on the phone. They have to hire some ex-stockbrokers or something, some people to get on that horn like, hey, Bob, how you doing? I got something that you definitely need to keep an eye on here. I have a product here that's going to potentially revolutionize the construction industry or whatever the heck they're doing, right? Because they got their knee pads and their measuring tapes or whatever the hell. And that's what bothers me also, is because when I first spoke about the company, I had some of you guys in that industry comment on the video saying, no, they're actually good products. I like their products. I use their products. They work well. Everything's great. So, you were expecting bigger and better things. And that's why, in my mind, this is just not adding up. So if they make a good product and professionals who use it like it, then the issue has to be on their end. And, sometimes, sometimes this happens, unfortunately. It could be, again, bad management. It could be a piss poor marketing team. I don't know what they're doing. But unfortunately, until they turn it around on their end, it's not going to start paying off on your end. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, like I always say, I understand that markets are very rocky, they're very volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.